Hey everyone, this is the Trader Investor. In this video, I want to talk about two things. And the two things are related to Forex. And the first one is, why do a lot of retailers want to get into Forex? And the second one is, why is it extremely difficult to be profitable in Forex? By profitable, I mean consistently profitable. And I said difficult, I didn't say impossible. So I'm going to address both of these. So let's start with the first one, leverage. It is a lot easier to get into Forex investing, Forex trading, because the leverage that brokers allow you to have. On the O&A side, this is one example here. They give you as low as 10 to 1 leverage to as high as 50 to 1 leverage. So what 10 to 1 means is, for 10% of the lot size you want to control, you can trade that currency pair. So for example, AUD/CAD requires 10%. And on a 10 to 1, it's very easy to assume it's about 10% across the board. They vary slightly based on the currency type and how they relate to the US dollar, but overall, just at a high level, 10 to 1 means 10%. That means on a standard lot of $100,000, you need $10,000 in order to trade the standard lot. So if you want to trade smaller, or if your account size is smaller, then you just need 10% of the lot size. If you're doing nano lots, which is about $100, then you only need $10 to trade with, just as a reference point. And when I say you can go as high as 50 to 1, then on a standard lot, you only need now 3,000 in the AUD/CAD example, instead of 10,000 to control a standard lot. I am not suggesting you take up the maximum leverage. I'm not suggesting if your account size is 3,000, you go right into standard lots. That's not what I'm suggesting. I'm just showing you why many retailers get into Forex. It's because the amount of leverage it is allowing you to exercise in order to be able to trade these currency pairs. So with that said, why is it so difficult? Why do many retailers wipe out their accounts? I myself included, when I first started, I have wiped out a couple of accounts. And why is that? So that's point number 2 that we will go into. And going into that point number 2, this is very important now to spend a little bit of time to do this. In Forex trading, you are up against investment banks. And I wonder how many people realize who we are up against. This is who we are up against. When we're trading a trade desk by each bank that has many floor traders in that investment bank waiting to take our money. I don't mean they're waiting to take the trader investors' money. They're waiting to take the unsuspecting retailers' money as a group. If we are not trading with them, which I've always mentioned, liquidity, order blocks, manipulation, if we don't understand this concept and we're trading against them, we lose. One of me can only trade so many hours in a day. This trading desk can switch shifts and have 3 to 6 people sitting in one desk throughout a 24-hour period. Or they can have this same setup in different time zones, and as the sun flips over, they follow the sun and have a different desk open while I'm sleeping. While I'm sleeping, they take care of my account. And so this is what we are up against. And are we ready to trade against institutions? Right? This is what they do. They have many traders looking at what we are trading. And when I understand that I'm trading against them or with them, it makes it a lot easier for me to take positions. Now, it still is not an easy thing to do. There's a lot of analysis you have to do in your charts to understand what is it that they're doing, why price is moving the way it is moving, and why we can follow them instead of be against them. That's really critical. If we can understand, we can follow them and not be against them. Very easy. Let's look at the last few weeks, and I just happen to take Aussie US dollar as an example. Any currency pair you can do and do this analysis. Any currency pair you will see this issue. So this red vertical dotted lines you see is the beginning of each week. So at the beginning of the week, during Asia hours is very quiet. This is where they set initial highs and lows for that session. And then during London session and New York session, they take it to the extremes that they want to take it. This is where they take unsuspecting retailers away from positions. So, for example, if you take on March 18th, when price broke the highs of March 17th, retailers will say, great, I'm going to go long because it just broke the highs. And this was the support line, it's breaking long, I'm going in. But that same day, they reversed the price and took out the shorts. They took out the longs with their stops. So if you were long, they took you out with their stops. The day before, if you had gone short because we broke these lows of Sunday, Monday, and then you went short, they took care of you as well by reversing that price. So they, in 2 days, they kept it in a tight range, but they have taken it to the extremes first. This is just looking at the daily chart so that you can understand. Another example, on March 25th, they broke the low, and any short who broke it with them, boom, it reverses the very next day. Even that same day, it had already closed right at that break line. So if you had gone short, you're already in pain, and then the very next day, you're in max pain now. And in some instances, some retailers who are not using proper stops are going to suffer because they could be called for margin. They might not have enough to cover their position. Their account might be now in red, in danger, and they might have to liquidate and even have to come up with extra money. Of course, the banks are not going to let that happen because they don't know if you have the extra money or not. They're going to just close your positions before that account goes negative. And so every time this repeats, this cycle repeats all the time. On April 1st, again, they broke these lows, and somebody might say, wow, it didn't work, on the 25th, it's going to work now. I'm sure it's going to go down because they kept this in a tight range. It's just, a bounce, and I'm going to go short. Boom. They took care of that person as well. And price is going to continue in this manner throughout the whole week, throughout the whole month, throughout the whole year. This is how Forex moves. Again, if you look at the 20th of April, price broke above and it immediately reversed. So they took care of that position as well. Whoever went long because we broke the highs of the previous day is taken care of. That same day is taken care of. So it is very, very critical to understand how price moves. It is absolutely critical to understand how price moves, that we are trading against. This is who we're trading against. If we understand this, then we trade with them. We find the crumb trails that they're leaving us to tell us it's time to go long. If you are a person who can just trade on the daily bar, then just come and look at how they are giving you a pin here. You don't rush to enter, you wait for this bar to close, and they showed you already we trapped shorts and we reversed it. And the next few days, for about a week and a half, price never went down that low. So this was a good entry. If you had this as your entry and here as your stop, you are never in pain for a long period of time, and you are not in pain for that deep because your stop was never exercised and price actually went up. And when you see a wick like this rejected and price closes way below the starting point, it's a sign that price could reverse as well, right? So here, wick closes below, price went down. Wick closes below, price went down. So very important to understand this. Now, at the end of day trader, it's kind of tricky because some of the best times to enter these trades are during London session or New York session. Especially at the beginning of those sessions is the best time to enter. So if you're not able to trade during those sessions, meaning between 3 to 5 a.m. New York time for the London session, or between 8:30 to 9:30, 10 a.m. New York time for the New York session, if you're not able to trade this, it's going to be a little bit difficult to participate in the New York market, in the London market. You'll be able to participate somehow, but you'll be subject to Asian market, low volatility, low volume, tight range to be able to make decisions. But with that said, if you can understand this concept, if you can understand that they take price one way to trick and trap traders to reverse it, then you're already so much ahead of the game. Look at this day on February 2nd. Price broke the low of January 28th. It went down, it trapped shorts, and it reverses, completely reverses. So it's very, very critical to understand what they are doing. You get this pin here on the 28th. This was a sign to go long. Again, if you're just doing this at the end of the day, it's kind of hard to pinpoint the exact entry. So maybe it's a break of these highs. Maybe there's some other thing. I don't trade at the end of day, so I cannot give you a good example of what is the best place to enter. All I can say is we have this accumulation, right? Price rose, we have an accumulation, and based on that accumulation we have terminal shakeout, right? So you could have assumed this was terminal shakeout. So a couple of things that is possible to do in these scenarios is to look at if you assume this was terminal shakeout, so the break of this and the test of that, this is a safe zone to enter. But look at what you are missing. You are missing actually all this move here. You are missing all this move here. That's, you know, 1800 pips that you are missing if you're trading on the end of day basis, because you want a good confirmation. This happened to be not the terminal shakeout. Terminal shakeout happened to be here, or this under normal circumstances, this is terminal shakeout. They just decided, you know what, we're not going to make it easy 100% of the time for all traders, and you will have some losing trades. That's the nature of this business. You will have some losing trades. So if that's the case, this is also an okay entry. If you see, I saw a pin, I entered, I put my stop here, and I got stopped out. Nothing wrong with that, because you did your analysis right, and this was according to you a terminal shakeout, and you have entered here. The other possibility of entry on a terminal shakeout is when price reverses here and give you a lower high to enter, and you enter long. So a good example of that would be, instead of having to wait up here, to enter, price gave you that bounce here. So you do save a little bit, and you can now take it. You can take it from this entry to up to this highs, which is 2,500 pips, right? So you can do that, and for me, always what I calculate is what is my risk. So if I'm entering here, my stop is somewhere in these lows, 600 pips to make 2,500. That's risk 1 to make 4. So that's a fantastic risk to reward. But is it according to your style? Is it according to your account size? Does your account allow you to do this consistently just by looking at end of day bars? But easier for me is to look at hourly or 15-minute bars. And here's why I find that easier. Price moves in bursts of threes. So when I see an entry here, this is 5 a.m., which is 8 a.m. New York time. It's 5 a.m. Pacific time. That's my time zone, as you can see. That's what I have set my charts. This is to my time zone. So this was lows shaken out. Lows were trapped in this consolidation on Sunday. So Sunday, they decided, here's the low we want to make for Sunday. And so an entry here is first leg consolidation, second leg consolidation, third leg, and now consolidation. And now this consolidation is kind of tricky because it might appear it has a fourth leg, but for me, this is just a sign that it's a reversal area. So the way I look at this is, I don't care if they have 10 more legs up here. If I did not enter here, I am not entering this trade. By the third leg, I'm thinking this trade is done. There are two things that can happen when we get to this top. Many times, this area is area for reversal, which we will see a couple of examples. And if it's not, then what they're doing is they're using this area to kind of fake people for short side. Here's one time. Here's the second time they want to test these lows. So if anybody thinks, oh, because we have a high here and we have a high here, we're going to take it, but they did not go any further. So they are making people think this is a short side because it's a reversal of this move of 3, right? Move of 3, reversal. They decided they don't want to reverse the price. I don't, especially in Forex, Friday, I'm done. I don't hold any positions. I don't hold positions overnight in Forex. Sometimes I do if I have a small size, and even if the whole position were to go to 0, if nothing happens to my account, I might hold that position. Otherwise, I don't hold overnight positions anyway. So this was Friday. So on Friday, the third leg happened. So on Friday, I'm not even excited to enter any trade anyway. Even if this was a good reversal sign, I'm not entering on Friday because it's Friday. And, by the time the third touch came, was during the, New York time about to open. This is 7 a.m. New York session. So this was, you could have taken this short for a short period of time, but this was it. So Sunday, they decided to make another low here on Sunday. They gave you a pin bar, which coincides with previous lows of the previous week, and price reverses in bursts of 1, 2, And you say, where's the third one? So maybe sometimes we can count it wrong, and sometimes doesn't have to go all three in the way we look at it. This is extremely difficult to do, so you have to be nimble at how you're analyzing. So because price kind of made these bars that were overlapping each other, you could say this was move 1, consolidation, move 2, consolidation or pullback, move 3, and boom, they reversed it. And move 1, move 2, move 3, again they reversed it. So you can see clearly every time there's a move of 3, whether we like how that move of 3 works or not, every time there's a move of 3, price has a tendency to reverse. So 1, consolidate, 2, reverse, consolidate, and then 3, and they're done. So if you can kind of draw trend lines, so this trend line broken is 1, this trend line broken is, so move 1 ends, move 2 ends, move 3, and then move 3 reverses, and we start a new move 1. And look at this, look at this pin bar, and if this was your stop somewhere down here, price never saw that stop. Yes, they faked some people out. They made people think, oh, you know what, this is sorry, let me draw this with a trend line. This is a trend line, and it bounced from this, so it's gonna bounce from here. I'm gonna take short. People were trapped here because price immediately reversed on them. And if you understand that 1, 2, 3 has already happened, you're not going to be in a hurry to enter 4. Like I said earlier, when a Friday came about, that move 1, 2, there was 1, 2, 3, appeared to have given us a 4, but this is a Friday when 4 is supposed to reverse and 4 never reversed. Because this was a Friday, I don't take a trade. So in this instance, 1, 2, 3, and price has reversed. And price reversed, and then what do we get? Do we get another 1, 2, 3 move? No, we don't get 1, 2, 3 move. But look what happens. So maybe they didn't like this as being 3. Maybe they didn't like this as the third move. So they brought price back up here and made this the third move. At some point they will reverse, but we have to be nimble. It's all about being nimble. And is it okay if we had this move wrong? By wrong, I mean we said it's going to go long 1, 2, 3. 1, 2, 3. Is it okay if we have this wrong? Absolutely. Why? Why? It's because we get paid when we decide we're going to get paid. We're not going to wait for somebody else to tell us when to get paid. Because if we wait, we get stopped out. This happens to us. So this move here from this pin to this highs is 400 pips. Am I okay to have taken 300 pips out of the market and the market decides to reverse? Absolutely, because my stops have already moved. My stops have moved because when I'm seeing this consolidation, I'm not trusting this consolidation. So my stop has already moved significantly. So at the very least, my stop is somewhere, halfway of this bar, or it could be somewhere here. And a lot of times I move it this tight when I see too much consolidation over two days. Over 2 days, because I'm expecting price to reverse and it did not give me that full reversal. Think about this. These people here, their job is to make sure that they are not giving you an easy way in or out. If they make it easy, if they make it 100% predictable, all of us would be gazillionaires, right? But they have much deeper pockets than we do. They have much deeper instructions on how they want to move markets. So we have to be okay when they tell us, not this round, I'm not giving you 1, 2, 3 this round, right? I'm not giving you 1, 2, 3 this round. I'm not giving you 1, 2, 3 this round. Now this round is very close to 1, 2, 3 depending on how you look at this area, but this reversal pin has moved 966 pips. This is a beautiful move. And so that's why it is critical to understand. They're going to move in threes, but if we see a reversal, what does a reversal look like? We see this pin on the other side. We see this pin with a wick rejection. Wick rejection, wick rejection. Wick rejection at the top, we know reversal could come, so that's our exit side. Wick rejection at the bottom, we know reversal could come. It's our exit from the shorts and our entry for the longs. We actually want to enter our positions and exit not before we are forced to exit, but when we want to exit. So in this instance, for example, if you have seen 1 consolidation, 2 consolidation, 3, I'm already exiting when I start seeing this bar here starting to break the lows of the previous bars, because I'm in move 3. If I'm in move 2, my stop is not this tight, but move 3, I'm already exiting when I see this. It's okay that I miss another couple hundred pips, but I'm already exiting here. That's why I'm doing these videos. I want you to be on the same side as the banks. 1, 2, 3. If you're at 3, do not enter at that same momentum. They fake you out. How do they fake you out? Think about this right here. Think about this right here. Momentum, right? 1, 2, 3 has happened. Somebody who does not know 1, 2, 3 has happened, they enter long right at the break of this line. What happens next? Price reverses. And can you stomach, and let's calculate this. Can you stomach this drop here? 330 pips drop. Can you stomach this pip knowing that this is 1, 2, 3 already done and hoping this is a new 1, 2, 3? Can you stomach 333 pip drop? For most of us, the answer is no. I don't want to risk 333 pips when I know we're at the third leg already. 1, 2, 3. Third leg. I am done thinking about long term. Best case scenario, I'm looking at this and saying this is done off 1, 2, 3. It's going to go down 1, 2, 3. It's a reversal. That's the best case scenario. Now, in this particular instance, it came at 6 p.m. my time, which is 9 p.m. New York time. No entry. This is absolutely no entry for me because it's Asia market. This is the low market. The Asia market is where they use to trick us. I'm going to give you a break. Anybody who only trades Asia, they see this break, they enter. Somebody else will see this break and they enter to the downside. Both sides are trapped. Both sides are trapped because these people here are immediately hurting after 2-3 hours. These people here are hurting the same hour. Same hour they're hurting. And then even if they stomach through this, price went up just a little bit, it consolidated. It never stayed up there for long enough. And what do most retailers do? I can't trade at night. I can't see this. I can't afford to let it go down to minus 300 pips again. I'm going to exit. I'm going to exit at break even. I'm going to exit a little bit higher because they don't understand 1, 2, 3 has already happened. This could be a new beginning of 1, 2, 3. This is Thursday, Friday. Thursday, Friday, a lot of consolidation. This is for me a sign that the institutions, the investment banks are saying, we're going to just take a break here. We want to decide what we want to do for the following week. And every week after 1, 2, 3, 1, 2, 3, if price moves that way, just think of it this way. If price moves 1, 2, 3, and then reverses, 1, 2, 3, and we start where we end where we start, price will never go anywhere because this cycle will repeat. That's not how it works, right? We all know price doesn't work this way. So they will give us the 1, 2, 3, and sometimes they decide they want to have a new 1, 2, right? And I was hoping to get a 3 here. I don't get the 3 because I get this reversal, wick rejection. A wick rejection. A wick rejection is an entry. A wick rejection is definitely a stop of that movement and reversing. So when I see a wick rejection, I'm absolutely exiting, even though I'm not getting my third leg move. It's okay. It's absolutely okay because I've already gotten the 3 legs, and this is just a bonus 2 extra legs, right? And I'm expecting now price to reverse. And what did price do? 1, 2, 3. And of course I showed you that earlier. So let's erase this. And when I am here at this bar here, let me get back my drawing here. When I am 1, 2, 3, and I see this third, and I see this pin, I'm assuming 1, 2, 3. That's my assumption. So this is where my entry is. I'm entering this for sure. Of course, I'm taking profits along the way, so I'm okay if I get stopped out and the remaining lot sizes. So what happens? They said, nope, that's not what we want to do. We want to trick you. We don't want to make it easy for you. Here's 1, here's 2, and this is 3. This is how we want to do it this time. That's okay. Be perfectly fine with that, because what they gave you is another pin here. They gave you another pin there. What time did this pin happen? It happened at 11 a.m. Pacific time, which is 2 p.m. New York time. This is New York session. Not the best time to enter, but this is still during New York session. I prefer to be done by 9, 10 a.m. Pacific time to be done with any trading. So I get this pin and I miss it. I have another day. The market is not going anywhere. The market is not going anywhere. Keep that in mind, because many retailers think, wow, I missed this 1, 2. There's 3 coming here. They're saying this is 3 is gonna go down here, so I'm gonna chase here. Guess what? Wrong chase. Wrong chase. Because once 1 and 2 are done, I'm not entering. Absolutely no entry for me, because I don't know how short or long move 3 is. All I know is there is no entry for me. And you know, during London Open, which is 3 a.m. New York time, they gave you this pin for long entry. Boom, you go long. And then at 9 a.m. New York time, they repeated that pin. What they did, they made this people who enter here, they made them doubt their positions. They made them doubt their positions by saying, I'm going to give you a little bit of pips and I'm going to show you I'm going to go down. And this bar here was a down bar for some period during this hour. And they made this people who have gone long at around the 77, 190 area when price goes down to 77.70, like 120 pips, they made them doubt their position, and these people close for a loss because they're psychologically drained. Maybe they're the ones who have made the mistake and tried to go short and already stopped out. And now when they say, oh, price is reversing, they're going to get scared and panic because they don't understand this 1, 2, 3 move. 1, 2, 3. They don't understand this 1, 2, 3 move. 1, 2, 3 doesn't have to be perfect. 1, 2, 3 doesn't have to be perfect. So sometimes you get it like this. 1, 2, 3. Sometimes you get it like this. 1, 2, 3. It's not perfect. But once you understand, once you are past 2, game over. No entry in the same direction. No entry in the same direction. Next week comes when you see this box and they give you a pin. It's a new week, new entry is allowed. Because they've already tricked the people who have gone long here. They've already taken their stops. Anybody who has gone long in this box here on Friday and kept their position active on Sunday, they're in a lot of pain because Sunday opened and it went down first. It went down significantly before they gave us this pin bar wick rejection for an entry. But even this wick rejection came during Asia hours, and I'm not entering this. I miss all this. Absolutely fine. I don't want to trade 24 hours a day. Right? I missed this 670 pip move. I'm okay with that. Because I'm not trading all night long. I'm gonna trade very early hour Pacific time, between 5 and 10, somewhere in this zone. And even then, I don't want to be glued to the charts. I have a day job. I'm going to focus on my day job. I'm going to focus on doing great on my day job. And I'm going to focus on looking at these charts. 1, 2, 3 move. If it's done, this currency pair is not for me. I'm done for the day looking at this currency pair. If no other currency pair is giving me that 1, 2, 3 move entry, I'm not entering. So why do most retailers fail? Because we trade against them. They are not for us. Don't think for 1 second that they are for us. There are billions of dollars of retailers' money in the market every day, and they're after those dollars. That's how they get their bonus. So price is going to get manipulated. This is what I mean by manipulation, right? You have this area here that just got manipulated. Anybody who wanted to go long at the bounce of this, they got taken care of. Anybody who did not wait for this pin bar to form to go long, they got taken care of. Anybody who wanted to go short here because it's a break of this line, they got taken care of. And you don't see me talk a lot about volume, but volume is very, very critical. And the reason why volume is critical is it'll be obvious here to you in just a second. Look at this bar, the volume. Look at this bar volume, right? This is the bar that they tricked everyone, but it was lower than this bar. It's lower than this bar that drove price down. Every time they drive price down heavily, the volume decreases. They drive it hard, and then the volume decreases because they faked you out and they gave you the spin. Every other bar at the top of this pin entry, you are safe because every other bar after that is low volume. Low volume, low volume, until they decide it's time to pick it up. Let's go. When they say let's go, it's time to go. And this is what happens. 1, 2, 3. We're already at 3. So if I am entering here, this is 1 consolidation, 2 consolidation, 3. Just remember, it's not perfect, and price doesn't have to move the same distance all the time. So if it's moving 1, 2, 3, I'm expecting today is Sunday already. Look what is happening today. Look what is happening today. Look what's happening today. So this is where we closed. This is where they opened, and they gave us a third leg. If you are long and held over the weekend, this is one of those times you got lucky. But even then, when you see this price drop, did you sell? Wait, did you enter here? Is this where you entered? At the break of these highs? And when price did this, did it hit your stop? Even worse, is this where you entered? And for sure your price got stopped out here. Even though they're going in the right direction, even though you know this was your direction. Did you know this was 1, 2, and there's still more room for up 3? Did you know that? And did you wait for this pin to occur to show us a potential long? But for me, I don't trade Sunday. I don't trade Sunday London time or Sunday New York time. So I wait for Monday to happen. So Monday happens at midnight for me, right? Once midnight happens, it's Monday in New York, in London. It's already Monday in New York. It's just turned Monday for me. So that's the time to enter, but I'm not trading at midnight. I'm not going to wait for the market at midnight. I'm going to look at what the New York trade desk decide to do, what pin bar they want to give me before I enter. So are you patiently waiting, or are you trigger happy all the time and chasing? Are you chasing up here today? Are you entering here because you missed all this move? Because you did this calculation. You did this from this pin bar to here, 718 pips, and you said, oh wow, I missed 718 pips. I have seen it go 2000 before. Let me enter. Do you do that? Please don't do that. 1, 2, 3. Price took care of move 3 already. Yes, it has potential to go more if the investment banks, if the institutions, if the big money wants to take it there, but they don't have to take it there. They owe nobody nothing. So what are you doing? What are you doing? And every week have a line and look at where they give you the Sunday low and the Monday, Tuesday high, right? That's what they decided on this day. They decided this was the high, that they're not taking it any further. Why? Because 1, 2, somewhere there was 3. For them, this was 1, 2, 3 move, or 2 was enough for them because they gave us weak rejection. Here was our entry. Of course, we can pinpoint our entry on a 15-minute chart to make it better. So if you want to be successful trading Forex, do not trade against them. Never trade against them. It's one of you against thousands of them. Thousands of them working in shifts. Sometimes not even more than 6-hour shifts. Which means there are 4 shifts. 4 different time zones. 4 different countries will come alive. They will have overlap time. And they will tell each other what to do. Here's where I am. Here's where a lot of the orders are sitting. Here's where you can hunt stops. And here's where I want you to take price. The next person comes over, they do what the previous person has set up for them. They take care of their business until the next one coming to the shift. Here's where I have taken the price. Here's where all the stops are waiting for you. Go collect the stops and take the price somewhere else. Or keep continuing to take the price down. Because at every level they have stops that they can collect. Don't be suckered into those positions. Don't take shorts by seeing a break and saying, oh, this is big momentum, there's a break coming, I'm going to take this short. Don't be trapped. Don't be trapped at the end of the day because you don't know what the Asia session is going to do. The Asia session is just going to start to set the tone which way they want to take it, and then London will take it there and New York will continue or reverse it. But if you're aware of 1, 2, 3, you're ready to go. And so before you start thinking about Forex, understand how markets move. Understand who you are trading against, and then trade with them. Don't trade against them. Trade with them. Their goal is for you to be suckered into the positions. Short position here, long position here, short position here. This thing keeps repeating. Long position here. I don't know where they want to take it. I have no idea where they want to take it. This is already a new bar and has 58 minutes to go, so this video will be finished in the next couple of minutes. But every time you see a pin, a wick rejection, anybody who has gone in that rejection direction is toast. They're trapped. They want to wait for price to come back down. It never comes back. It never gives them an opportunity to even close at a smaller loss by coming near their entry price. It never comes there. Once London or New York decide they're ready to move, they're ready to move. And your entry here sees no pain. Sometimes you'll see pain, but a lot of times this entry sees no pain. It shoots right up. It takes a breather. One takes a breather. Are you out? Yes, partial position. Are you completely out? No. Why? Because number 2 hasn't happened. Number 3 hasn't happened. So 1, breather, take partial position. 2, breather, take partial position. Off, off. 3, start to see break off previous bars. 100% positions off for me. Done. This move done in a day and a half. A day and a half you have taken care of this position. And if you know 1, 2, 3, you can keep this position overnight. Why? You've taken your profits, you've captured some gains, you've locked in some gains on the rest of the position by putting higher stops, and you continue. A lot of times gaps can come between, day 1, day 2, day 3, but most gaps come between Friday, Sunday. So you can, if your stop is, high enough from your entry, even if there's a gap, you can sustain that gap. If you lose, well, it's okay, because the nature of this business is not 100% winning rate. But what you want is a consistent winning rate. So please do not get trapped. Market manipulation is a real thing. Do not get trapped. If you don't have your stops properly, there are times they widen the spread. They decide which side they want to widen, because you are buying at ask, you are selling at buy. So if you're going long, your stop loss is on the sell side. Your stop loss is on the sell side. So they can widen the sell the spread and make the sell hit your stop loss if your stop loss is not properly set. If you're short, they can widen it on the side where you're buying, right? Your stop is a buy action. You sell it at a cheaper price, you buy it at a more expensive price. So your stop for a short position is a buy action. So they can widen the spread on this side. The bid remains the same, the ask keeps widening because there's hunting for stops. So now you know. Now you know. Just by this knowledge, you're going to think twice about your entry. Just do some homework, just figure out, in any pair, just take any currency pair and look at the charts Sunday to Sunday, what happens. Sunday they set the tone, Monday through Friday they take 1, 2, 3 and reverse. In this case they didn't reverse, but a lot of times you can see here price went sideways, right? 1, 2 and then a short 3 and price reversed. 1, 2, 3, price reversed. 1, 2, 3, price reversed momentarily, give you 1, 2, 3 again, price reversed. So this reversal, 1, 2, 3 reversal, 1, 2, 3 reversal happens constantly. Just be on the right side of the trade. Do not rush to get in. Study these. And there's no entry recommendation. I'm just giving you information that you can use to leverage what the institutions are doing, what the investment banks are doing, and you trade with them. Trade with them. Just follow them. All right, I know it's been a long video, but I know it's been very, very educational, and I know a lot of people are going to take advantage of this. So don't be trapped. That's the main purpose. Know who you're trading against, and be prepared to follow their trails. All right, everyone. I wish you great success. Don't forget to like this video. And I'll do some more. I'll come back and keep educating you on additional ideas so that you can become a better trader, a better investor for your positions. Take care, everyone, and I will see you on Monday when the cash market opens for the US equity market. Take care.